Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, we're going to take a look at the market action here of the last week and check in on a couple of key ETFs in China, so stay tuned. Okay, so let's start off here with the Dow Industrials on a weekly basis. You can see we've now closed back below the 10-week moving average. The Dow is down 205 points for the week. It is the third week down in a row. So we'll continue to watch to see whether we get movement down to the downside. This my wave count that I've got on Elliott wave count is that we've got minor wave 1 down and minor wave 2 back, and that this has been an A, B, C flat. I see no reason to change this scenario. We've had a lot of volatility here. We have still not taken out these highs. The only thing that would cause me to change this scenario is if we were to take out the all-time highs back here from May, literally a year ago, May 22nd, week ending May 22nd, 2015. And you know, it's tried a couple of times. Until that happens, this is the scenario I'm going with. And the Russell 2000, a lot weaker picture as you can compare this to the Dow Industrials. And this is on a weekly basis. This is now closing back below the 10 also. You can see we had the high here in the week ending June 26th. And this is the wave count I've got. I believe that we are within minor wave 3 down, and that this is minute wave 1 and 2 back and working minute wave 3 within minor wave 3. And if the wave count is accurate, like I believe it is at this point, I'm expecting the selling to start accelerating, okay? So that's what I'm looking for on the Russell 2000. Take a quick look at the high-low indicator. I've got a high-low for the New York Stock Exchange, the 52-week highs minus lows. You can see how it's just been fluctuating here over the last couple months above zero in kind of no man's land in here. There were 67 more new highs than new lows for Friday. And this is the picture, just kind of just hanging up here. And I'm looking and watching for this. If I were to look at this in here, these lows, right about, what is this low? 38 and 33. We get a breakdown below that, I think we're going to start rolling and cracking and rolling down and getting below zero, which is exactly what the NASDAQ is doing. The NASDAQ broke down below zero here in early May and has continued to do that over the last 2 weeks. So it looks like it is starting to roll over. So that's one of the key indicators I look at on a daily basis. And the information in this video is just a small snippet of what I give my insider members on a daily basis. And we look at the daily and weekly on the weekend. And a whole slew of indicators. So this is just one of the key indicators I look at. Let's take a look at 3 key economic ETFs I like to look at: the semiconductors, home builders, and financials. The semiconductors continue down. Look at how many weeks is this. I think this one was an up week. So let's count this 1, 2, 3, 4 down weeks in a row. So a pretty heavy duty dose of selling here. We'll watch to see if it continues to push to the downside. You look at this trend line. What are we looking at? This is the trend line from back 2011, and that's why I've got it going through this point here, because there was 3 solid points on that trend line. So I'm just kind of keeping that for right now. We did not push to a higher high above the November, December highs here. So looking to see if we were going to continue to have this sell-off and roll over. The home builders, same type thing. Now you look at this and say, wow, look at all these trend lines. Well, yeah, I mean, you do need to draw trend lines. And here's the trend from 2011 that was broken with the August sell-off. We snapped back, but then we did break down below it here in the what is that? That's September, the end of September. And then we just kind of hung below it and then rolled over. Then we had a shorter term trend line that was formed that was smashed on, what is this day? Why is it not highlighting? There you go. The week ending January 8th. And then we come down, form another pivot, and then what do? We pull right back to the trend line that we had up here and then come back down. Okay, so this is going to be a pretty critical support area in here. If it comes, when this comes down, the selling continues and breaks this, because it's going to be very close to this major trend line that we've got all the way back to the financial crisis lows in March 2009. So that is going to get real interesting when this selling continues. All right, that's the home builders, and of course home building is key to the economy and what's going on. The financials, not quite so weak. I am looking at a daily basis here first, mainly because I saw the break on Friday of this trend line. So, I thought they were breaking here and then they snapped back. Now they do look like they're breaking again. We'll watch to see. We do have a moving average cross. We do have a trend line break, and this is a bigger trend line than what we were getting here. There was just a little minor trend line break that was occurring here. So I think there may be a little more to it. This may be the real deal versus this fake out that happened right here. Let's take a look at the weekly chart for XLF. You can see we don't have it closing down below the 10 week yet. So the rollover, that's why I went back to the daily and looked at it. The rollover looks like it may be starting this time. All right, let's take a look at let's see, where is it? Biotech is what I want to look at first. So the biotech continues to sell off. It is the weakest sector that I've been tracking. It's down 5.2% for the month of May, so the first half of the month. It's the biggest loser, and you can see it's down 3 weeks in a row. No reason to think, it's in a solid downtrend. I'm not believing that it's going to stop. It doesn't mean it can't pause, but it's in a pretty solid downtrend. The next one is real estate, and real estate's the opposite. It's been in a pretty nice little uptrend here, with the market in since the February week ending February 12th. Now, it does look like we're getting a reversal bar here for the week ending yesterday. Okay, this last week, this is a reversal bar. We get a close below this, and I think that's going to be very negative, just like what happened up here. You get a close below it, and that's pretty much all she wrote. You did get a big pullback week, but you never took out the high, and that was it for the move. So I'm kind of watching to see if that same thing happens right here. Now, the last thing I'm going to mention in this video is about China, the Shanghai weekly. Look how this is rolling over. Now have 4 consecutive weeks below the 10-week moving average. And I'm looking, the next support down here is the lows from January. The January-February lows, 2638 is key support. If it breaks that, which I'm expecting it will, the next area is going to be 2282. Now, why am I talking so negative about China? I think the trend is still continuing to the downside, and we just had 2 key economic reports released by China that's reinforcing the big slowdown that's occurring in China. So going to be really watching for Sunday night and Monday to see what kind of impact that has on the market, because both of these reports, retail sales and industrial production, were below expectations and continue to show a slowdown. So that's the picture for today. Hey, if you're watching this video anywhere besides my website, head on over to the website, check it out, check out the membership page, and become an insider member. All right, everyone, have a great weekend, and we'll talk to you on the next video.